The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Noon from TFNN. Welcome to the July 14th terrific Tuesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a terrific day. Let's make sure we do everything we can to make it an extraordinary Tuesday. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I, we make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to throw at us. Today, we're going to go look at the circumstances of what the buyers and the sellers are communicating to you and I, the bulls and the bears. I'm absolutely grateful for your presence here. I'm here to serve you. Feel free to pick up that phone. Dial in at 877-927-6648. Of course, internationally, you can call us at 727-445-1044. Would love to hear from you, especially on this terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 56 points, trading at 18,034. S&P's up 7 at 2107. Composites up 31. She's trading at 5102. Russell up 5 points, trading at 1270. The DAX finished up 32 points. The FTSE up 15. Gold's back $1. Silver's back 13 cents. Light sweet crude up 82 pennies as we speak. Leading the charge to the downside here this afternoon. AutoZone is off $8. Intuitive Surgical down about 7. Netflix off 6. Spirit Airlines off 5. Anchor Pharmaceuticals down 4. Dollar-wise, the upside, Google up large, up 3%, $16. Biogen up about $11, up on nearly 3%. Amazon up 2.5%. That's over $10. Intercept Pharmaceuticals up 4. Ultragenyx Pharmaceuticals up 6%. Intercept is up $10. So it was about 4%. And let's go check out these markets out here. So let's go figure out what the message of the markets is as of 1:09 p.m. on this terrific Tuesday. Let's pick up where we left off yesterday. Because at 2 p.m., what I gave you were some parameters with inside the Dow. So let's start with the Dow out here because it's got perhaps the strongest message both daily as well as weekly out here. Now, as you know, I prepared you as good as I could last week that the market was in the process of forming a summertime low. I don't think I could have done much more, couldn't have been much more of a Paul Revere. And that was when everybody was telling you that all holy heck was going to break loose. And Stevie was saying, no, not so fast. Now, I have a set of indicators that many of which I do not share with you during the radio show. They're included in my newsletter service. I teach you about those indicators. I teach you how you can actually utilize this set. Many of these are not normal indicators out there, but we had no less than a dozen. These are not things that measure the same thing, but no less than a dozen that kept popping up and saying associated with the bottom, associated with the bottom, associated with the bottom, and several other indicators that I do share with you. We're going to take a look at those. We're also doing the same thing. Now, in the case of the Dow yesterday, we said, hey, look, if that Dow's price oscillator finishes above 2.5, that basically gets it into jet propulsion territory. That gets it into the promise of future prices ahead. You know what? It's just having some additional follow through as we speak right now at 111. If the Dow closes here, doesn't back off the accelerator at all, the Dow is headed towards its highs again. It will take out its highs. It's going to get, now I don't know whether it's going to take it out by a penny, by a dollar. Hey, maybe it doesn't take it out. Maybe it gets to within a buck or so. It's headed for the highs out here. The Dow is headed back towards its highs. Now, it's got to clear. It's not, as I say, it's not necessarily a one-day shot. It's got to clear the swing point from June 23rd. And once it does that, it can go ahead and it can get all the way back up into the May 20th level. Now, that was the Dow. We're going to actually just stick with the Dow here because in connecting the dots, which is really what I want to be able to do for you. I had a great caller yesterday. He said, can I be more clear? Can I simplify things? I don't think the word used was simplify, but was there some way that I could take all of this technology talk, indicator talk, and maybe whittle it down to something that was a little bit, tell a story that's easier to understand. And, that's a challenge. It's something that it's a great challenge that I'm certainly up to and try to, look, the easiest way to teach somebody something is always link the known to the unknown. That's why when we talk about some of these resistance points, and I share with you, I talk about just driving down, your normal path for work or wherever it is you go, and you know that there are certain points that you run into where you're going to get into traffic. And I try to correlate that into the market out here. Now, that's not what I'm going to go into as the traffic signal. What I'm going to do here, well, there's a sort of a traffic signal out here. Now, this is actually great for both bulls and bears. As we know, last week, I don't recall which day it was. It might have been Tuesday or Wednesday. It could have been Thursday out there. But on that day, whichever day it was on a daily basis out here, we had all of the indices, most of the indices, the four primary indices that you and I track out here, all formed hammer candles. It does that so few times out there. I think it had done it 11 times, and that was the 12th time, something like that. Or maybe it was 6 and 7, something like that. What I can tell you is 90% of the time, it's more than 90% of the time now, that's formed significant bottoms in the market. So the responsibility of buyers and sellers, bulls and bears, the guys that check in the stock market each day, is to do nothing more than paint a sign for you. And it's up to you and I to be able to interpret those signs. Now, this is actually the weekly chart on my screen out here of the Dow. We're going to the Dow because we took a look at its price oscillator yesterday. It achieved that result. We're seeing some additional follow through today. No idea what 4 p.m., and this is real key, no idea what 4 p.m. holds for us, but it is important to understand that. We'll come back. We'll certainly follow back up on that tomorrow. But if we just take a look at normal trend lines, here is a weekly chart for the Dow. We are in a raging bull market still. There has been nothing that has been broken from any type of significant trend line out here. If you take a look at the trend line, the green line's going from lower left to upper right on my screen. You come down to March of 2009 because you see it doesn't get less technical than this. You do not need to be any type of technician to just simply take a look at a trend. All you need is a chart, which you can get anywhere, print it out. You can take out a ruler. You can draw your trend lines. Trend lines are nothing more than trend, and they identify support and or resistance. You break one level of support, doesn't matter which way. In this case here, we're talking trend support. You are likely, price is likely to fall down to the next level. It's just really that simple out here. Now, if we take a look at the importance of also last week, I talked about the 4 individual days, or the day when we had at least 4, we had more than 4, all of the indices that each had hammer candles. The Dow is actually the indice that's going to give both the bulls and bears the most amount of information. At this stage, here's what we know. Price pulled back towards a level of support, formed a hammer candle, and this is a weekly chart that we are looking at. So we've got a weekly hammer on the Dow, and we have a daily hammer on the Dow. And look, it says that low from last week, which by the way is going to be 17,465.68, is really critical to hold. Now, if price were to break through that for whatever reason, let's not go through the reasons out here, then price is going to come down and break this, going to test this trend line because price never actually got all the way down there inside the Dow. If it closes below that, that's bad news. That is absolute bad news for buyers and great news for sellers out there because price is then likely to fall down to the next level of support. And that could easily be that trend line coming back into March of 2009. However, that's not what we have out here. And if you take a look at the hammer candles on a weekly basis in the Dow during this uptrend out here, they have marked significant lows. If you take a look at the last one that formed on a weekly basis, it was February 7th, 2014. I promise you, I don't remember what was going on back in February 2014. I promise you, it was more scary than whatever we went through last week. Just simply the decline from the high to the low was much more than what we saw here. Now, I won't say much more, but it was more than what we saw here most recently. You can go back to a low that was formed out here in October of 2013. Ring a bell, October's. October is how they form lows out here. Another hammer candle, another significant bottom in the marketplace. Whoops, I didn't mean to grab that, but so be it. I'll just simply have to put that trend line back in place out here. Didn't mean to grab it, but there we go. That's probably about it. So you can see we had a hammer candle here. Let me blow this up. The only other hammer candle, this is coming off of the March lows out here that we had, was back in August of 2011. That low was tested. That held as support. Market did what? Market made a major bottom, went ahead and moved forward. So the information that you and I have at this stage, I can't tell you whether it's major, how major, but I can tell you it's an absolute bottom. On the daily, on the weekly, until those lows get taken out, that is the message for you and I. And that just simply is on top. That was the first message that arrived. Then we had the price oscillator get into that bullish territory. Now, likewise, take a look at trends. We know that the trend line here, that's the red diagonal lines coming across my screen. I've got two of them from the 2007 top down into the lows in 2009. We can see how those areas held as resistance. We can also see that during that time period, this is why you and I want to be paying attention to the Dow and that hammer candle and that trend line, is because if you take a look at that hammer from December 21st, 2007, price failed there. Price failed, and price actually fell all the way back down to where it should have, which was the trend line support coming off of the 2002 lows out there. How about that? Price always falls back to a level of support, or typically falls back to a level of support out there. Now, that was the first hammer candle that was broken on the way down. Then you had another one back on the week of September 19th, 2008. Once that gave way, price then continued to crater. In that case, you had to take a look at horizontal levels of support out here. Of course, great bottoms and great tops. If you take a look at the top here in 2007, this is a weekly chart. They have one thing in common. They have a price relative strength divergent pattern. They have where price moves higher, it does it on less relative strength, and it's confirmed with a bearish reversal signal. The same thing at the lows here in March of 2009. Fast forward to where we're at today. Do you see any type of price relative strength divergent pattern on Stevie's chart out here? The answer is no, you don't. So even that, which could be the most bearish patterns out here, that is called the top and the bottom. 2009 bottom, top in 2007. Top in 2000 out here was also formed with what? With that price relative strength divergent pattern. The bottom back in 2002, which pattern that showed up? Price relative strength divergent pattern. Did we kind of get an idea as to what's going on here? The hammer candle inside the Dow, muy importante. The trend lines, muy importante. The trend is still to the upside. The bulls and bears are just simply giving us signals that we're going to go back and at least visit those highs out there. And that is only courtesy of the Dow. If we finish where we're at today, the New York Stock Exchange, very, very close to jet propulsion territory when we take a look at its oscillator. It's really close to a positive 150. By the way, last time that we were up here was back in October of 2014. That's very likely just how strong this move is. And it's going to be a nice, long summer for the bulls. This is Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 59, S&P is up 7, and we'll go back to the New York Stock Exchange in a moment. First, I want to take a look at the VIX Index. Now, the VIX Index has got many different uses. If you can find uses that provide you with consistency, and there are many that are out there, so you really should. You should add that to your trading arsenal. I'm happy to teach you how to do that. I've got a workshop that I did. If you sign up for the newsletter service, we'll find some way to get you access to that. I include when it's appropriate, I include that information inside the newsletter so you know exactly what is going on there. And if we take a look at just the VIX Index here, I'm going to look at the cash indice out here, which is posted at the top. You got the cash indice posted, which is at 1312. Then I've got all of the current futures contracts for the VIX Index. Remember last week we were taking a look at it, and there was this backwardation. You had the current VIX was up at like 20. And all the other futures contracts were well beneath that out there. That is not normal. That is actually telling you that the market is, there's an impending bottom that is taking place. Actually, right here, you get the VIX Index at 1312, and all the other futures contracts are higher, all the way out into 2006, into November. of 2006 out here, where you've got the VIX index trading at 1828. That's the natural progression of a bullish look. In fact, what I will say is that the VIX index is headed down to a price level below 1253. You're at 1311 right now. Now, what the VIX index has done during the past couple of days has been pretty significant, right? Totally gave back all of its gains, plus more than that. So just as you get that Eiffel Tower formation sometimes in stocks, the Shanghai market, well, looks like the VIX index had that same kind of move. Now, what's really unusual about the last 2 days with regard to the VIX is that it has not had, I reported on it in my newsletter this morning, but that's not what I'm going to talk about right now. The lack of number of occurrences and what that means. But I will say, though, in general, with regard to the VIX index and the type of decline that it had yesterday versus 2 days back to back, but the type of decline that it had yesterday, the market has the odds favor the following three events. What I can tell you is there's been 227 occurrences where we saw the VIX index do what it did yesterday. And that's going back to 1990, so a quarter of a century. And I can tell you, out of those 227 occurrences out there, the average price movement on this goes back to 1990. The average price movement in the S&P 500 by day's end, 91 cents or minus 91 cents out there. In fact, since 2009, if we just take a look at the bottom, since 2009, the same thing, a flat market. However, on days when the market has closed higher, as it is right now, the S&P is closed up by 9 points. On days when it is closed lower, which it isn't, if you see a reversal today, one of two things are going to happen. Either the S&P is going to finish flat, or it's more likely to finish down by about 12 points out there. Those are the three most likely outcomes. I say at this stage here, the information that we've got at our fingertips is that the S&P is going to finish up somewhere between now and 9 points up for the day. Now, what could get in the way of that? Now we'll go up to the summation index here. The pattern that is in play here that'll tell you and I which one it is, which of those three occurrences, is probably inside the 30-minute chart here for the S&P futures. You can see that what this has going on, just like we took a look at inside the Dow, where price was moving higher, doing it on less relative strength out here. Well, we got that same pattern inside of the 30-minute chart here for the S&P futures. The ES gave us a bearish reversal signal, had some follow through here just before we came on the air. Price came down, ran into support, the 8-day exponential moving average. Basil uses the 9. I like 8 and 13. They're just simply, we don't need to split hairs. They're just simply Fibonacci numbers out there. And if we take a look at it, if we see a move above those highs, which looks like is about the 2102.75 level, we're more likely going to see a move up about 9 points or so. Let's go to Ben in Tallahassee, because he also wanted to talk about the S&P 500. Ben, how you doing today?
Good, Steve. Hey, I just got a few quick minutes, so I'll listen to you after. But you made it could be a great call where you said by mid-July, right? You saw a turnaround in the market?
Originally. Well, mid-July, about a month ago, I thought we would see a potential top. I don't think that's the case.
Okay. So was that based on? I know you're what you're really, really good at is doing your homework on many years back. Was that where you based that on, or was that
was one of the elements? That was one of the elements. And folks, what Ben's talking about is taking a look at an analog of what the markets do on average out here. And in 2015, that analog basically doesn't work. Whether it's the presidential election, whether it's the years ending in 5, whether it's a third year of a presidential election. We're going to break here. Can you hold on through this break? Or?
Well, I can't, but what would be awesome is so you got to change an opinion then. It's.
Yeah, I'll try to cover as much as I can.
Awesome.
Thanks for calling.
Thank you very much.
We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow, she's up 67. S&P is up 8 points. The composite's up 37. So just as a follow-up for Ben, and Ben, thanks for calling in. Appreciate the call always. And what Ben was asking about was, in essence, the historical patterns that the Dow forms out here. And if we take a look at those, what he was referring to was back in the early March timeframe. I was suggesting to each, before we got to the sell in May, I was suggesting to each of you, sell in May does not mean sell May 1st. Hey, sometimes it does, but then you see a rebound, you see a bounce back. On average, the high during what we'll call the unfavorable seasonal cycle. You see, I forget the name of the guy that did the work on the favorable and unfavorable seasonal cycle out there. Basically broke the calendar into 2 6-month period. And the unfavorable is May 1st through October 31st out there. But And the sell in May just got, somebody must have said it. It became catchy, and people just caught on to it. The reality is, sell in May actually means this year you would want to sell. We're not there yet. On average, it would say July 20th. And that's to the trading day. Today is what, July the 14th? So you're talking about 6 days from today. So it's sometime next week, right? The trading day. And historically, that's when the high would come in. Will that come to fruition? It could. It's something to pay attention to. Has this market followed historical patterns? Absolutely, positively not. In fact, it has not provided any kind of analog that I can hang my hat on. And there's many that you can take a look at. You can take a look at, for example, this is the year of 2015, right? You can go take a look at years ending in 5. Well, years ending in 5, the top should come in July 29th. So if that's the pattern, we'll see as we get towards the end of July. But here's the thing, to answer Ben's question out there, just to be clear, why have I changed my view? Well, the significant bottom for that summertime move higher was supposed to occur sometime in early March. Could have been March 3rd. That would have been the norm. March 3rd, we had the market up at its highs out here inside the S&P 500. That's what we're looking at. Years ending in 5, well, that would have taken us right to about the April 21st time frame. And April 21st, actually, we've broken below those highs, or at least the market had broken, the S&P did. So that's out of the question because that's not normal. If we take a look at second-term presidents, it's March the 2nd as well, when there would have been a low. So all of the lows, down markets, okay, would have come in right around March 25th out here. That just simply has not occurred inside the marketplace. So you've got to throw those elements out. I do believe I know what the market is following from an analog pattern out there. And I share that with newsletter subscribers, and we update that from time to time, always looking for some clues out there because they are out there as long as you are willing to, as well as you're willing to look. And so, Ben, the answer to your question, which I can't share with you the reason why, there is a tool that I use that is a hidden liquidity gauge. And that hidden liquidity gauge says that this market has got plenty of liquidity, even though you and I don't see it, and you would be shocked to find out where it comes from. You would be really shocked. But what I do know is to ignore it would be foolish on my part, at least, in sharing with you why I believe the markets are going to go where they're going to go. So there's some hidden liquidity. And you see, markets are going to move up. It's not necessarily just based on volume. It's also going to be based on how much money is inside of the system. Certainly, geez, and this was just kind of like a gift out here, right? How much money is flowing into Shanghai these days? You're going to put your money to work. Are you even going to go ahead and consider putting it over there? Maybe some are, but I would think the U.S. markets are a little bit more comfortable for the normal investor slash trader out here. In any event, I do expect that we're going to see the markets. Now we've got to get past this mid-July, end of July time frame, and I don't expect the markets ever to go up in just one direction out here. So retracements, and we'll just measure things one at a time. What you and I have is I could be just absolutely dead wrong on my call out here. And the cool thing is we've got a hammer candle to be able to let us know if we are dead wrong with regard to the market forming any kind of significant bottom. And that's actually the cool thing, because oftentimes you're kind of flying blind. But we actually have a stick shift out there. We've got a shift that's not called a stick shift when you are flying an airplane, but it is what is that shift out there? We'll just call driving our Bugatti. Right? We don't want to drive a Ferrari or a Lamborghini or a Vet. Not that those are bad cars to drive out there, but you and I, the market is driving in a Bugatti out here. So I hope that answers your question, Ben, and anybody else that is listening. And back to the New York Stock Exchange out here. Now that price oscillator reading right now is 137. Where it's just really close to the really close to the level of 150, which when you get to the 150 level, doesn't have to happen today, doesn't have to happen tomorrow. If it does happen today, though, please pay heed to it, because the message of the market on top of everything else that it just gave to you and I is that this market's going to move higher. And then if you understood the liquidity aspect out there that's going to flow somewhere into some market out here. I believe some of that is coming into the U.S. stock market out here. That says that our markets move higher for quite some time. And that's really the same message. And if you go back and just simply say, I'm only going to pay attention to indicators that work, such as an example, and by the way, my study on all of that data with regard to what the markets do on average, it's 82 years worth of data that I've compiled there. It's why I can tell you, I know exactly how many days the VIX index did what it did yesterday and what the typical outcome is. And you need to know that in order to be able to have some type of guide. So we'll see. It's going to be flat. It's going to be up 9 or down 12 points. And somewhere really close to that range, I think, is how we end the day. If you go back into 2014 in October. Look, the price oscillator got above that 150 level. It wasn't a straight line move, but it gave us higher prices, right? It gave us higher highs. We went back to the highs out here. Same thing inside the New York Stock Exchange. I know a lot of folks are hung up into the gap out here. And yeah, that gap can be an area of resistance, no question. But at this stage here, what's more meaningful to you and I is what is that price oscillator doing? If it closes above 150 or at 150, we'll call it even 149 at any point in time here today, tomorrow, next couple of days out here. What it's telling you, the communication messages, just go back here, what happened back in August of 2014 out here. Markets went to higher highs once that occurred. Didn't do it right away, but markets went to higher highs. Same thing that took place back here in February 2014. Markets went to higher highs. Same thing that took place back here in October 2013. Markets went to higher highs. Same thing back here in September 2013. Same thing back here in July 2013. I mean, I think what you're trying to do is get me to find a failure out here. That's my whole point. Same thing happened back in May of 2013. Same thing that happened back here in January 2013, in November 2012. Would you like me to keep going on and on and on? Because I can. September 2012. So I think you get the picture, and it's why you and I want to pay attention to that. I know there's all types of reasons. Greece, China, debt, you name it, all kinds of stuff out there. What you and I need to do is just turn off all the noise and instead just come back. Look, the whole idea of mastering probability is to try to find a set of odds that are in your favor. That's really all that you and I are trying to do. It's the same reason why I'm saying, hey, what's really important for you and I today with regard to understand what the market wants to do is how is this price relative strength divergent pattern resolved here on a 30-minute chart? That doesn't mean that if the markets start pulling back and moving lower, that's it, it's over. What I suggest that you do is you look for an entry point to go along the markets out here. And if you're going to trade short, well, no matter what you're going to trade, make sure you stay within your time frame horizon out there. So, at this stage here, and look, the NASDAQ composite, we talked about this last week, and its price oscillator hasn't done anything. It's above zero. That's all it needs to do. What you and I took a look at inside the NASDAQ composite, which I thought really gave us one of the bigger signals, I guess it was the NDX 100 that gave us the better signal with regard to the mere fact that we were in a consolidation. So let's go take a look at the NDX 100. Let's go do that. Let me just review that for you out here. We'll put up the NDX. And I'll show you exactly what it is that I was looking at. Another reason to suggest that the market goes back to its highs. And what is that? Well, if you take a look at the NDX out here, one could say that it formed a double or triple top. And what that means is that if you take a look at that first move up into April 27th, and that was in the 45.62 level, we saw a nice move with a nice wide-ranging bar on May 27th up into that swing point. Never got up to the high, but got up to 45.51 versus 45.62. That's good enough for me in my work. That's 5 points away. Then we saw price get back up here on June 24th. Actually got up to a high of 45.61 versus 45.62. That's what would be an ideal textbook double top or triple top. But that's like reading. Most people, when they read the newspaper, you might know somebody like this, I don't know, but maybe you don't know anybody like this. They will actually read the headline and believe they have the whole story. A lot of people will read technical indicator books and kind of read the headline and think they have the whole story. The whole story with regard to a double or triple top is you've got to come, in order for it to confirm, you have to come down and you've got to break that first swing point where it formed. In this case here, it was the May 6th low out here. And what did the market actually do when price got down to that May 6th low? It formed a hammer candle on July 7th. That's what it did. It supported that what the NASDAQ composite is in is a consolidation. It's not a double top, nor is it a double bottom. at this stage. If prices do break out above that 45.62, then the answer is yes. It is a double bottom. It is a consolidation pattern. Any break above 45.62 says you're going to do a move of somewhere between 43.49 to 45.62, 230, 240 points, because that is your consolidation pattern. And odds favor when you break a consolidation up or down. And that holds true in this case here. You break it up or down, you've got about a 230-point move, a measured move, equal to or greater than the consolidation pattern out there. So the NDX 100, what is it trading into as we speak right now? It looks like it's gotten all the way up. It is. It's already trading into that June 24th high. And for those of you that listened in on the show, especially when the markets were being tested, especially when it went over this, especially when the hammer candles formed, back then, I said that the markets are going to go test the highs inside the NDX 100. So we're already up there, and it doesn't necessarily matter with regard to volume, at least with regard to how you get up here. So if we go take a look at the Qs, though, let's go see what we've got going on pattern-wise. Let me turn a couple of those indicators back on. Let's just turn on the volume. You're already above the 0.786 retracement out here. And if we take a look at the swing point, there's really two that we're trading into. You're trading into April 27th. That's got 31 million shares. You've done 14 million shares. We've done about half of the days trading at this stage. It looks to me like you're going to come in light. Does that mean anything? It says, look, if you close inside 110.02, light volume or not, you're going to go test the highs, 111.16. If we take a look at the next swing point that it's dealing with, this is probably even more important, right? Because it's the most recent swing point. It's from June 24th. Was June 24th a holiday? No, it was no holiday. In fact, is it the swing point high? Nah, it's not. It missed it by a buck or what have you. The Qs are trading into that swing point with volume. It only has 15 million shares on that day. You're coming into it already as we speak at 147 with 15 million shares out here. So the Qs are going to try to bust out those highs. They are going, just like in one of my favorite movies, The Hurricane. How many of you are familiar with Reuben Hurricane Carter? And it was a great movie out there, great true story, a great book that you ought to read out there. But we're going to go to Philadelphia to our man, John. John, thanks for calling. Thanks for holding.
Steve, thanks for taking the call, and thanks for all your good work.
You're welcome.
Steve, wanted to slip in a supplemental question to your review that you've just done on NDX.
Yes.
By the way, great analytical work and action based upon that recently, so kudos to you. Question is this on NDX. I mean, we have a select number of names that are very strong. Google, Amazon, Facebook, amongst others, that are leading NDX higher here. And my question, can you review for us indicators you track? McClellan Oscillator, Advanced Decline Performance, RSI Performance, that stuff. And tell us what you'll be looking for and to review what you'd expect those indicators to be doing, assuming that the NDX powers over the 45.60 high. The reason I ask that question is to have some supporting evidence in the event that happens to build the confidence that such a rally would, extend, meaningfully higher.
Absolutely. And I would say, John, that there would just be one chart that I would look at that everybody else at home can look at as well. And it's such a great question. So thanks for calling and thanks for asking about it. And what everybody can do, sometimes you can, with your charting packages, you can line these two charts up. One is the equal-weighted ETF structure. And that's, folks, I think there's a couple of them out there. The one that I use is QQEW, First Trust NASDAQ 100. It's the equal-weighted ETF. And what you want to do is, hey, John, we're going to hard break right here. So I'll continue to answer that after the call. You're welcome to hold if you'd like.
Thank you very much. I will.
Okay, that's great. So, folks, when we get back, we're going to go take a look at the QQQ series as well as the QQEW. You go ahead and pull those up on your screen, and I'll show you what it is I'm going to look at. Steve Rhodes with TFNN. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. In this last break here, we're going to go take a look at 2 ETFs. We're looking at specifically the QQEW series. That is the equal-weighted ETF for the Qs, which is on the bottom portion of my chart. We've got John on the line with us from Philadelphia, and his question was, what indicator, what tool would I look at to suggest that either the market will stall? I don't remember the exact words that you use, but John, what I will be paying attention to is any type of divergent pattern between the equal weighted ETF as well as the Qs. Now, it does not work 100% of the time, but it is a great tool to let us know when things are out of sync. And what you want to do is the divergence. If we take a look at the last divergence that we had out here in this indicator, and you took a look at the QQEW series, and folks, I'm just using the close of the session. So these lines here are the close of the candle session. And what you can see is a divergence between the low back around March 26th out here and the April secondary. In the equal weighted, it was actually making a higher high. Inside the weighted structure of the Qs, it was making a slightly lower low. That was telling, and you've got to go back to the chart and look for bullish reversal signals to follow. But that was telling us that that there was actually more strength in the market, and it was the larger weighted cap stocks that were pulling things down. What happened? Market made a bottom back then. At this stage, John, where that would take place is if we get a close above, I don't know the exact number, we're going to call it somewhere around the 110.98-ish area inside the Qs. If we get a move above that, there's no way that the equal weighted is going to catch up to it. So we just have to be aware that there's a divergence there. Maybe that just is a test to come back and test the consolidation breakout. Maybe it's a retracement. But that is one of the things that you want to pay attention to. And folks, if you're looking at my screen, this takes you back into the early 2014 time period. And only one time has this failed, and that was here. I've got it with a red arrow on it, and that was really back as the highs were being formed in 2005. The equal weight was actually moving higher, 2014, I'm sorry, December of 2014, and the QQQ was making a lower low. Now, it turns out that obviously price went to higher highs, but there was a retracement that followed. Things were going along the dance path out here. But that's what I would be looking at. And then, obviously, the New York Stock Exchange price oscillator, where that's at, because I say that is a better indicator versus 100 stocks. Here you've got 3,000 plus stocks. So those would be the two things that I would be looking for. What question did I create from that answer, or did I not answer from your question?
No, Steve, thank you very much, and I do appreciate it. Lastly, I appreciate you posting that triple, the Dow, the NYSE, and the composites daily charts with those, McClellan oscillator indicators underneath. That's real helpful. So thanks
Great.
very much. Appreciate it.
My pleasure. Thanks so much for calling out there. So, folks, as we come into the last minute out here, if I just take a look at other things going on inside of the markets, you've got Euro, Japanese yen, that currency pair. That's important for us to pay attention to. It's not really doing anything. It hasn't reversed. It's not doing a whole lot out there. So nothing to worry about there. Qs coming into their most recent swing point, doing it with volume. I can tell you the Russell 2000. The Russell 2000 is leading the Russell 1000. That is always a bullish outlook out here. So we'll just watch what tomorrow we'll report back to you on what the New York Stock Exchange did at the end of the day with its price oscillator. Remember, unless we get back to flat today, pretty good chance the S&P finishes up 9 points. You're up 8.25 as we speak right now. That's the average over the last 25 years. Thanks, folks. Have a great day.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.